The Gulf is not just trying to embarrass India, it is squeezing Asia, forcing the region to pay more for oil. Saudi Arabia has raised oil prices for Asia. Starting July, Asian countries will have to pay more. The hike is over $2. So Asian countries will pay a premium of $6.2 per barrel. Oil markets have reacted to Riyadh's move. Oil prices jumped today, touching almost $120 per barrel. That's the highest in almost 3 months. Oil prices have increased almost 60% this year. And if this trend continues, Asian countries will end up shelling more for crude. Market analysts say this price hike is surprisingly high. The market had forecast an increase of $1.5. Saudi Arabia jacked up prices by more than $2, but not for everyone. Let's tell you which countries will have to pay more for Saudi oil. You would know that Asia is among the biggest buyers of Saudi oil. 60% of Riyadh's exports are sent to this region, to Asia. China, Japan, South Korea and India are the biggest buyers, so they will have to shell out more for crude. What about countries like the United States? Well, no such dynamic pricing for them, no changes in crude prices for the US. In fact, the Saudis have not hiked prices for American exports for more than 2 months now. Why the special treatment for Asia? Why are Asians being forced to pay more? There's a simple explanation for this. Asia is hungry for more crude. Lockdowns are being lifted in countries like China. As economic activity resumes, the Chinese will need more oil. Now, we know that Japan has announced it will stop buying Russian oil. Saudi Arabia is the biggest exporter to Japan. So Tokyo will lean more on Saudi oil as it pivots away from Russian crude. Countries like India also need more oil. So the demand is set to go up. Sanctions on Russia have led to a shortage in the market. The Saudis are making the most of the situation. They're basically preempting more demand for oil, which is why they have raised prices to boost profits from exports. And Riyadh uses oil pricing in more ways than one. Yes, it will make more money by jacking up prices, but Saudi Arabia is also known to use oil as a diplomatic tool. Riyadh is not a fan of sanctions against Russia. Last month, the Saudi energy minister came out in Moscow's support. Prince Abdulaziz bin Salman said this: "The world should appreciate the value of OPEC+." These are his words. What is OPEC+? The biggest grouping of oil producers in the world. 24 countries are part of it, and this list includes Russia. Saudi Arabia is the de facto leader of OPEC+. Since 2016, both countries have worked together on oil pricing, how much supply should be released in the market, how much should be held back. They've coordinated on all of this. And just by dictating supply, Saudi Arabia and Russia have determined how oil prices behave. This has been a mutually beneficial relationship, but Russian sanctions could break up this partnership. There is pressure to suspend Russia from OPEC+. Reports say some members of the alliance have also explored this idea. Riyadh is not one of them. So it is reminding the world why it needs Russia. You see, there's a very basic problem with buying oil. You cannot find substitutes overnight. There are different varieties of oil available in the market. Some need to be less refined than others. So countries buy oil depending on the kind of facilities they have to process that oil. For instance, if a country can process raw crude oil, it will buy that. If a country has limited processing capabilities, it will buy light crude oil. In other words, you have to find the right type of oil for your country. If you want to stop buying Russian oil, you can't just replace it with something else. You will need the same variant that you were buying before, or you'll have to create facilities for the new variant. Now, Saudi Arabia is one of the few countries that can supply a viable alternative to Russian oil. They can fill the gap that the disruption from Russia has created. And that's what it's trying to tell the world. You can't just replace Russia overnight. You can't just remove Russia as an oil supplier. Western sanctions are forcing the world to make difficult choices. The United States is leading this mission against Russia, but it faces no economic consequences. It is not paying more for oil. It is Asia that's paying the price for this forced pivot. WION is now available in your country. Download the app now and get all the news on the move.